Michael Saylor's strategy just sold Bitcoin again. Not because the company says it stopped believing in Bitcoin, because the Bitcoin vault now has a second job, helping manage the corporate capital stack. Yes, the HODL machine has apparently hired an accounts payable department. From July 27th through August 2nd, Strategy sold 1,638 Bitcoin for about $104.7 million. The SEC filing says $52.4 million funded preferred stock dividends, while $52.3 million funded STRC repurchases. At the same time, Strategy sold just over 3 million MSTR shares and raised $290.6 million. Of that, $250 million went into the USD Reserve, which reached $4.0 billion. Another $28.9 million from MSTR sales also funded STRC repurchases, with $11.7 million added to cash. So, Strategy was selling Bitcoin, selling common stock, building cash, and buying back preferred stock. Simple little treasury operation, very relaxing. But this is the part that matters. Strategy is no longer running a one-direction Bitcoin accumulation story. Its capital stack now includes common shares, multiple preferred securities, a USD reserve, and the Bitcoin treasury. The reserve exists to support preferred dividends and interest on outstanding debt. STRC itself carries a variable dividend, and Strategy kept its annual rate at 12%. That means liquidity management matters almost as much as the size of the Bitcoin pile. Bitcoin is still the core reserve asset, but now it also reports for liquidity duty. Strategy formally announced that framework in June, including a Bitcoin monetization program. So the headline is not "Saylor panicked and sold." The filing does not say that. The better interpretation is that Bitcoin has become part of the company's financial plumbing. Number go up department, meet accounts payable. That creates a new question and a little more homework for MSTR investors and Bitcoin watchers. Are these sales occasional housekeeping, or is Bitcoin becoming a recurring liquidity source for the preferred stock machine? The next weekly filing should tell us more. Bitcoin sold or bought, reserve changes, MSTR issuance, and STRC repurchases. If Bitcoin sales fade and outside capital covers the obligations, the recurring liquidity thesis weakens. If they continue, investors need to track not only how much Bitcoin Strategy owns, but how that Bitcoin gets used. The calm verdict: this is not evidence that Strategy abandoned Bitcoin. It is evidence that the Treasury has evolved from a one-way accumulation pile into an active capital management tool. Still a vault. It just has a cashier now.